Hey, good morning. This is Mayor Valensky with Driving Markets. So, just to give you aware, there's a caveat that anything said on this piece is an opinion only. I'm not an advisor. I'm not an investment advisor. I'm not a financial advisor. I'm not licensed to give advice. I'm not licensed to discuss any type of direction with you or any type of platform. You want to go and organize your own trading, you're with your own trading platform. It's your money, you deposit it, you control it, you deposit it, you withdraw it. Nothing to do with me whatsoever. If you make money, great. If you lose money, commiserations, but it has to be absolutely clear this is only an opinion piece on macro, what's going on in the markets, based on experience, and that is it. If you want to act on it, that's up to you. Okay, so all the money belongs to you, everything's yours, nothing to do with me. I don't touch anything. Anyhow, let's move on. So the big story today is, in my opinion, the euro trashed yesterday, went below for a few minutes during the day session, below 1-on-1 against the dollar, and that's the lowest it's been in over 20 years. So the euro is on the trend down. In my opinion, it's going to go around about to 95 to the dollar, so it'll be 95 cents to the US dollar. The US dollar, to a degree, is wreaking havoc amongst financial markets because the dollar is getting so strong against all the major currencies that's making American goods a lot more expensive, which could have an adverse effect overall on the US economy. However, against the pound, against the euro, against the yen, it is just raging higher, and is likely to go higher for two reasons. Number one, it's a safe haven. So in times of crisis, times of concern, times of worry, in times of downtrading financial markets, investors, traders will buy the dollar because of the strength of the US. So that's one factor, which is a safe haven. The other one, which is purely based on the interest rate cycle. If you look at the confirmation of rising interest rates in the States, it's much greater than that in Europe and in the UK and in Japan. And that disparity, or that divergence as they call it, is what's causing the dollar to strengthen even more against other majors. I mean, if you look at the dollar yen, for example, I wouldn't be surprised if dollar yen gets to 140 to 142 within the next 2 to 3 months. As far as the cable is concerned, that's pound dollar, I expect that to go to about 110. I mean, it's really bad, but it's about 110 could be in the next short term. And again, as euro dollar, you talk about 95 to a dollar, 95 euros, 95 cents to $1 is what I expect to happen also in the next month or two regarding the euro. So that is a big concern. The other factor, the bigger the news in the market yesterday, was oil. Oil also dumped below $100 a barrel. It looks like it might have broken an uptrend and heading down, even though I'm still convinced it's going to go to 130, 140. With China now introducing new lockdowns, the potential demand for oil may fall away. And as a result of that, oil's dropped, and Chinese stocks also fell, even though cruise liners were good performers yesterday, and also were airlines, because the oil came down. However, looking at the big macro picture on China, what you may have is another frustration in the supply chain, because the more lockdowns there are in China, then that's going to frustrate the supply chain. And guess what? That's also going to frustrate the inflation levels that we're at the moment. So you're going to end up with higher inflation as a result of no supply, higher demand, and you're going to end up getting stuck again. So the central banks are going to have big problems regarding that. You've got also CPI and PPI, Consumer Price Index and Producer Price Index, out this week. That is a big indicator. I'm calling CPI in the States at about 9.1%. Could be higher, but that's what I reckon, about 9.1%. It's not a massive jump, but it will push it again well above the 40-year high, and that'll be a major concern to the central banks. If it does come at 9.1 or anything higher, then you can expect all the way to the end of the year interest rates in the States to go up by 3/4 of a basis, 3/4 of a percent, or 75 basis points every month going forward to the end of the year, which will push interest rates all the way to around about the 3%, 3.5% level by year end. As far as the UK is concerned, they do need to raise interest rates, but Andrew Bailey and the MPC are concerned that it could dampen the growth of the economy, even though there is full employment. There's a big mess on international travel, as everyone's experiencing. We're now in the middle of the summer holidays, and there is just suitcases all over the place, cancelled flights, and it's mayhem and chaos. So those people who are willing to stand in line, stand in queue for 3, 4, 5 hours, good luck on you. That is commendable. So you've got to have a lot of patience when it comes to travel. Cryptos. So Bitcoin, which is the market leader, fell below 20,000, and you can expect Ethereum or ETH to fall below 1,000 also in the near future. There is downward pressure on cryptos. Again, they're range bound. So as far as Bitcoin is concerned, it's range around between 17,700 and 22,000. So you can trade the range if you're trading cryptos. All the other cryptos, especially the lower levels, are also down. And you've also got, as far as the high-tech sector, the Microsoft, the CRMs, the Salesforce, Google were all down yesterday on the back of potential recession and inflation fears, and also that 3 Arrow, the crypto hedge fund directors or owners, founders, they disappeared, they couldn't be found. That sent a few shockwaves through the crypto arena, etc., etc. This is Meir Walensky with Driving Markets. Remember, anything said on this piece is an opinion only. I wish you well, have a good day, all the best.